As of late October 2024, Bitcoin is surging, trading near 68,000, supported by optimism around the Federal Reserve's interest rate cuts and anticipation around the US elections. It has outperformed the S&P500 by gaining over 14% since September. Meanwhile, the S&P 500 and NASDAQ have both reached record highs, benefiting from strong corporate earnings, especially in the financial and tech sectors. Despite some midweek tech sector dips, robust earnings and economic resilience have fueled continued market optimism. The German DAX is also on an uptrend, supported by signs of economic recovery in the Eurozone. G'day folks, welcome back to another update. Today we're looking at Bitcoin, the German DAX, S&P 500 and the NASDAQ. And here we've got Bitcoin. First look at the trends on the monthly, the weekly and the daily. Before we go any further, make sure you hit that like and subscribe button to support the channel. So here we've got on Bitcoin on the monthly, it's still in a neutral zone, or even though the price has made some recovery over the last almost 12 months now. For the weekly, that's a fresh breakout to the upside. It's been moving quite nicely, although the price is pretty much stabilized in that consolidation area, again, since the start of the year. And on the daily, we did actually bounce off this support at 52,640. Broke up through this minor resistance at 65,004 and now approaching this key resistance at 70,020. So as I said, it's making some break to the upside on the CCI, fresh breakout. So if we look at the micro charts, again using the daily as a reference, we only take long trades. You'll see here on the 1 hour chart, you can apply this to any other time frame within the intraday. But notice here, you would have taken long trades during that period. Avoid taking long trades or at the moment, or don't take any short trades until we see this break to the downside on the daily. But at the moment, the hourly is showing bearish movement, so just be careful of that. I'd like to see it break above, and as soon as it breaks above that CCI, then we take long trades. So here we've got the German DAX. Now on the monthly, it's been bullish for some time, nice movements, but you'll notice we've got a bearish divergence on the CCI in the monthly, and that's likewise a bullish divergence, a bullish movement on the price chart, so it's a bearish divergence. On the weekly, we've got another bearish divergence here, lower highs on the CCI versus higher highs on the price. Hasn't actually started to pull back on the monthly or the weekly yet, but on the daily, we did have this bearish divergence, and we drew in this target range between a 23 and a 38% level, and it's actually hit that target range already with that wick on that candle there. And of course, this could break a lot further. The CCI is still dropping, so that's a fresh breakout on the daily. The CCI is still dropping, and we may see the price fall further into that minimum target range. And of course, if it drops below that 61%, we may see a reversal further down to the downside, threatening the 200 moving average there. If we go to the micro chart for the German DAX, again using the daily as a reference, we only take short trades. So you would have taken a short entry back there, and you can see there, we've got another short entry there, fresh breakout, and you'd still be in a trade today had you traded that a few hours ago. The S&P 500 is on the monthly, it's still bullish, although it's showing a bearish divergence on the CCI versus higher highs on the price. So a lot of the markets are doing this at the moment. The S&P is one of those. We've got another bearish divergence here on the CCI, lower highs versus higher highs on the price. There was a bearish divergence back there as well, a separate one. You can see there it broke down and hit our minimum target range at 23.38% Fibonacci. And there's also another bearish divergence happening, so I'll just move that up to that point there. So that's lower highs on the CCI versus higher highs on the price. And on the daily, we've got another bearish divergence. You can see there, that's actually moved slightly higher since our last update, but that's still bearish on the CCI versus bullish movement on the price. Hit this resistance at 58.82. And I've drawn this target area 23.38% level, and if it keeps dropping from where it is at the moment, the CCI is broken below the moving averages. It looks like the price may fall further, and if it does, we're going to at the very minimum see it touch this target range. Of course, it could go further, but at the minimum target range we expect it to hit. If we go to the micro charts, we only take short trades based on the daily. You can see here short entries, and you close it out when the CCI breaks into that moving average range, taking a small profit at least. At the moment, the CCI is in that mid-range, so don't take any long or long trades yet, or short trades. Wait for that to break to the downside to take short trades, making sure you move in line with the daily CCI movement there. Now, the NASDAQ has also got a bearish divergence on the monthly, very long term. lower highs versus higher highs in the price. And I've actually drawn a target range in it. It hasn't actually worked yet. There was a bit of a threat there with that wick on that candle. Didn't quite reach it, but the price is still rising, so we have to wait for that to happen in the coming weeks or months possibly. On the weekly, we also had another bearish divergence there versus higher highs in the price, and actually we've got another smaller range bearish divergence there versus almost a double top there on the price. So again, let's keep an eye on that. And on the daily, another bearish divergence. You can see there lower highs on the CCI versus slightly lower highs there. That's not quite a divergence there, but there was one back here, bearish divergence there. Higher highs on the price, broke down, hit our target, and that actually went almost down to the 100% retrace level of that Fibonacci range. Now at the moment, actually I won't, no, there's not a divergence here. You can see that price is moving in line with the CCI, so no real divergence, and that is also not really a divergence there. So nothing to worry about on the daily in terms of divergence yet. And if we go to the micro charts, we only take short trades based on the CCI below its moving average there. So only take short trades. At the moment, the CCI is within that mid-range, so wait for it to drop below before going short. Don't go long until you see the daily break to the upside as well. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.